Joining me now, Citi Private Bank's Global Chief Investment Officer, Richard Cookson. Hi, Richard.
Good morning.
How much should we make of a potential divergence in outlook from Mr. Trichet and Bernanke?
Not much. I think there's a sort of distribution problem here, i.e. Germany and some of the core countries are doing very well and the periphery is still stuck very firmly on the floor. So the ECB has to tread a very difficult line between containing sort of potential reflationary problems from Germany, but also at the same time not wanting to push the peripheral countries down the plug hole again.
But the talk on Trichet is that sooner rather than later he will pull back on those emergency lending measures, whereas now the talk, when we talk about Bernanke, is more QE.
Yeah.
So it's a subtle change, isn't it? It is a difference in strategy possibly going forward.
Well, there's no doubt that the ECB is more, as it were, hawkish than the Fed. The Fed, don't forget, has a dual mandate to maintain maximum employment on the one hand, but also to keep prices stable. It's in danger of failing both of those. Now, the big question for markets and for investors generally is what on earth the Fed does about it.
And what would you like to see the Fed do about it?
Well, what we need to see from a sort of economic perspective is for the Fed to lay out the available measures that it can take in order to try and inject some more liquidity into the economy.
Would you expect Bernanke to start laying that out today when he speaks in Jackson Hole?
Yes, I mean, he's going to have to tread a very difficult line because on the one hand he doesn't want to say that everything is going to hell in a handbasket. On the other hand, what he does want to do is to say, OK, well, if things do deteriorate further, this is what we can do. And that's not what they did at their August meeting.
But we now know what they are doing from August. They're investing payments from principal back into long-term treasury. So beyond that, what do you want the Fed to do?
Well, actually, what they said in August was essentially they would keep monetary policy neutral.
Right. The balance sheet stays the same.
So what you saw up until August the 10th were equity markets and bond markets both flying because equity investors assumed that the central bank, the Fed, would loosen monetary policy. It didn't, which is why you've seen that pullback in equity markets. Now, the big question we have is whether there is a consensus at the Fed for...
which there isn't.
No, there isn't. We have Hernig basically saying they should be withdrawing some of that stimulus. And the Fed has a very consensus-driven model. So it's going to be difficult for Bernanke to push that through. Now, if they do push it through, again, going back to your original question, what on earth happens then? Well, if they do dramatically expand monetary policy by more QE, by going and buying more bonds and
MBS, whatever
it might be, then presumably all things equal the dollar falls, so you push the problem straight back then into the Eurozone. Now, don't forget that Eurozone spreads for the peripheral countries, if you weight it by GDP, are actually record highs now. So the crisis has not gone away. It's metastasized, as it were. We're
all talking, though, about Germany now becoming more reliant or making the transformation to domestic demand. Can it make that transformation? We did see private consumption in the latest GDP figures rising. So if exports do fall away, can Germany make the transference to private consumption or not?
It's quite difficult to see Germany going down that route. It's never really done it before.
No.
And why on earth it would go down that route now is, I would think, rather a good question. Look, they're tightening fiscal policy. They run a very large current account surplus, and there doesn't seem any real demand within Germany to change that structure. That's what it needs to happen. Whether it's going to happen is a very, very different question. I don't really indulge in wishful thinking, but practicalities. Richard.